Welcome to The Explainer. All right, today we're tackling a huge question, one that honestly hits close to home for so many of us. Why in the world are house prices so incredibly high?
It's a question that can feel, well, pretty frustrating, right? Maybe even a little hopeless, as that dream of owning a home just seems to slip further and further away. But here's the thing. The answer isn't as simple as, oh, we just need more houses. Nope. The real story is way more complex than that.
We're always told it's just about population growth and not enough supply. But the reality? It's more like a perfect storm of these really powerful, interconnected forces that have completely changed the housing market as we know it.
Okay, so let's really dive into this puzzle. We're going to peel back the layers and take a look at the three major forces that have all come together to create the housing market we're all dealing with today. This quote right here, it really gets to the heart of the matter. The data shows that, yeah, of course, supply and population matter, but they alone just cannot explain these massive, decade-long price spikes we've been seeing all across the developed world.
So if it's not just about the number of people and the number of houses, what's the first huge piece of this puzzle? Well, it's not the bricks and mortar. It's all about the money used to buy them.
The key concept we need to wrap our heads around is something called financialization. This is basically when housing stops being just about shelter and turns into a financial asset, like a stock. It means the price someone can pay for a house is no longer determined by how much they've saved, but by how much a bank is willing to lend them. That changes everything.
So, to really see this in action, let's look at the UK just before the 2008 crisis. Now, get this, supply was actually almost keeping up with population growth. But, and this is the kicker, at the exact same time, bank lending for mortgages just exploded. We're talking by over 400%. That, right there, is the real fuel for the fire.
And what this does is it creates this powerful, self-reinforcing cycle. So banks lend more, which means buyers can bid more, and that pushes prices up. Then, as prices rise, the houses themselves become more valuable as collateral, which makes the banks feel secure enough to, you guessed it, lend even more. It's a feedback loop that can just rapidly inflate prices way beyond what the fundamentals would suggest.
But hold on, it's not just individuals caught up in this loop. There's a new and very powerful type of buyer in the market. And let me tell you, they are changing the entire game.
Now, have a look at this chart from the European Central Bank. It's fascinating. Look at what happens after 2013. You see this absolute explosion in purchases from corporate buyers, especially those investment funds you see in yellow. They've gone from being minor players to a major force in the market.
And this has huge consequences. When these big-time investors move in, house prices start to detach from what local people are actually earning. The market becomes less about the local economy's health and way more sensitive to things like interest rates or even stock market swings.
And as you can see from this map, this activity isn't spread out evenly at all. It's super concentrated, creating these intense hotspots in certain countries and major cities. And that helps explain why one country might see its prices just skyrocket, while another, with the very same interest rates, sees much more modest growth.
All right, let's move on to our final force, and it's one we have all lived through, a fundamental shift in how and where we want to live, totally supercharged by the pandemic. The numbers on this are just staggering. According to a study summarized by the Bureau of Labor Statistics, the shift to remote work was responsible for more than 60% of the U.S. house price surge between late 2019 and late 2021. 60%!
So here's the crucial point. This wasn't just about people needing a home office. It was a massive reshuffling of demand. People fled expensive cities for cheaper areas. But this huge wave of new buyers just drove up prices in those once affordable places, creating this ripple effect across the entire country.
And the effect was direct, and you could actually measure it. The research found that for every single percentage point increase in remote work in an area, home prices rose by a corresponding 1.5%. It was that clear of a connection. So let's pull all these threads together. This isn't one single issue we're talking about. It's a perfect storm of three powerful forces that have created a completely new housing reality. First, you've got a financial system that has basically decoupled price from savings, flooding the market with credit and just pushing values higher and higher. Second, you've got these new, deep-pocketed institutional investors who are competing with regular families, and that fundamentally changes the link between prices and local wages.
And finally, you have a once-in-a-generation reshuffling of where and how we all want to live, which send these massive shockwaves of demand through markets that just were not prepared for it.
This perfect storm has truly changed the very DNA of the housing market. So, if the rules of the game are no longer just about local supply and demand, but about global finance and remote work, well, that leaves us with a final and pretty provocative question. What happens now to the dream of owning a home?